Welcome back to Explain the Charts, where we break down the markets with a focus on both news and chart data. Today, September 29th, we're going to analyze USDJPY, the US dollar versus the Japanese yen. USDJPY has been experiencing significant volatility recently, and it's crucial to understand the factors driving its movement and identify opportunities for profitable trades. Firstly, let's examine the news that's been impacting USDJPY in recent days. Shigeru Ishiba's victory in the Japanese prime ministerial election has strengthened the yen, as he's been seen as a hawkish figure, suggesting he'll support the Bank of Japan's rate hikes. This has acted as a headwind for USDJPY, leading to a decline in the pair's value. Additionally, the release of the U.S. Personal Consumption Expenditure Price Index, PCE, data for August has fueled expectations of further Fed rate cuts. Softer-than-expected inflation figures have prompted investors to believe that the Fed will cut rates again by 50 basis points in November, further weakening the U.S. dollar and pushing it towards a year-to-date YTD low. This has put downward pressure on USDJPY, as the yen is perceived as a safe haven currency in times of uncertainty. These news events have created a complex backdrop for USDJPY, with competing forces influencing its movement. To gain a clearer understanding of the current trend and potential trading opportunities, we need to look at the chart data. Now, let's switch to the daily chart of USDJPY and analyze its price action. We can see that USDJPY has been trending upward since the beginning of September, with a series of higher highs and higher lows, suggesting a bullish bias. However, the recent decline in USDJPY, triggered by the news events we discussed earlier, suggests that this trend may be reversing. The pair has broken below a key support level at 144.50, which could signal a further decline in the short term. If we look at the daily charts last week of candles, we see that it started at 149.34, moved upward to 149.87, and then dropped to 142.14, indicating the price was unable to hold the 149 level. This suggests that the bulls may be losing momentum and the bears may be taking control. It's crucial to watch the price action closely to see if USDJPY can regain its footing and break back above the 144.50 support level. A break below 142.14 would signal a stronger bearish trend and could lead to further declines. Let's zoom in on the 1-hour chart to get a more granular view of USDJPY's price action. Here, we can see that USDJPY has been trading in a range between 143.00 and 142.00 for the past couple of days. The price has been consolidating within this range, with multiple attempts to break above and below the resistance and support levels, respectively. The recent decline in USDJPY has pushed the price below the 142.50 support level, further strengthening the bearish bias. However, the pair has found some buying interest at 142.14, which may be indicating a potential reversal. It's important to monitor the price action closely to see if USDJPY can break back above the 142.50 support level and regain its bullish momentum. A break below 142.14 would signal a stronger bearish trend and could lead to further declines. This is why we should switch back to the daily chart to see what the longer-term context is. The 1-hour chart is showing the pair is trading between 143.00 and 142.00 and bouncing back up from 142.14. But the daily chart is showing a larger downtrend, which is not positive for the USDJPY. We must be careful about being too bullish long-term as the daily chart is showing a downtrend. However, we can also see that the daily chart shows a strong level of support at 138.00. This means that if USDJPY breaks below 142.00 and falls to 138.00, there is a strong possibility it could bounce back up. To further analyze the recent price action, let's narrow down on the 15-minute chart, focusing on the last few trading sessions. Here, we can see a clear pattern of downward momentum with a series of lower highs and lower lows. This further strengthens the bearish bias and suggests that the bears are in control of the market. The price has broken below multiple support levels, indicating that the selling pressure is increasing. The 15-minute chart is showing that the pair is trending down, with each attempt to bounce back resulting in a new lower low. The price has struggled to hold above 143.00, with the most recent bounce back leading to a new low of 142.10, and further indicating that the bears are in control. If we look at the recent candles on this chart, we see a series of red candles indicating that the selling pressure is stronger than the buying pressure. This suggests that the sellers are in control of the market and that the price could continue to decline in the short term. The 15-minute chart is showing that the pair is in a downtrend and is likely to continue to trend downward. Looking back at the news events and the chart data, we can see that the current market environment is unfavorable for USDJPY, creating a strong bearish bias. The recent decline in USDJPY, fueled by news of a hawkish Japanese PM and potential Fed rate cuts, suggests that the current trend may be reversing. The daily chart shows a break below key support at 144.50 and a strong level of support at 138.00, which means that if USDJPY breaks below 142.00 and falls to 138.00, there is a strong possibility it could bounce back up. The 1-hour chart shows that USDJPY has been trading in a range between 143.00 and 142.00 for the past couple of days, but is bouncing back up from 142.14. However, we must be careful about being too bullish long-term as the daily chart is showing a downtrend. The 15-minute chart shows a clear pattern of downward momentum with a series of lower highs and lower lows. This further strengthens the bearish bias and suggests that the bears are in control of the market. The price has broken below multiple support levels, indicating that the selling pressure is increasing. The 15-minute chart is showing that the pair is in a downtrend and is likely to continue to trend downward. Overall, the current market sentiment is bearish and traders should exercise caution. In conclusion, the recent news events and chart data suggest that USDJPY is facing a strong bearish bias, with the potential for a short-term reversal. Key price levels to watch include the 144.50 support level, the 142.50 support level, and the 138.00 support level. If USDJPY breaks back above the 144.50 support level, it could indicate a shift in momentum and a potential return to the bullish trend. However, a break below 142.14 on the 1-hour chart would signal a stronger bearish trend and could lead to further declines. If the price falls to 138.00, a bounce back up is highly possible. Traders should remain vigilant and monitor the price action closely, looking for potential breakout points and confirmation of the dominant trend.